All right. Good morning, good afternoon, depending on what time zone you are, what geography. We are beginning to muster, gather, prepare to launch into today's presentation, Broad Peak Electronics. Let's give it just a couple of moments to allow other folks to join, and then we will kick off and get into today's topic. All right, Alistair, Ned, we're a minute in. Let's take a quick vote. Shall we proceed boldly into today's meeting plan? That's one vote. Yeah. Okay. It looks like we've got about 45 and counting folks joining us. That is fantastic. I think we had over 100 confirmed. So I'm expecting others will continue to join here as we get underway. My name's Jason Delgado. Hello to you all. Delighted to have you participate. In today's fast-paced world, there's a lot of things that you can do for the hours that you're at work, and so that you've agreed to grant us a time slot is much appreciated, and we hope to make it impactful for you. My name's Jason Delgado. I'm one of the executives in a global engineering and system integration firm called EPAM, and I lead our global commodities trading practice. So my role in today's meeting is to represent my approximately 100 clients globally that are a mix of physical asset-based companies, so companies that own oil wells or power plants or they're big consumers of power, as well as have a large quantity of the world's biggest financial commodity trading firms, paper barrels, paper gas. So that also means then, given that so many of our attendees are also market participants, my goal is to try to represent you and be the voice of you. So across the folks that we were expecting, a cross section, I should say, of the folks we were expecting to attend today, there are folks with roles like risk manager, traders, financial executives. You all, at least in my view, are folks who have real exposure. You're trying to make decisions about electricity, your electricity exposure, using the instruments, the tools that were built for a different era. So our goal in today's session is to deliver some new insights, some new thinkings, ideas for you, and I'll be your tour guide. Okay, so some housekeeping. The goal of this meeting is it's interactive. It's not a seminar. We want it to be collaborative. We ask that you please do use the QA feature in the meeting tool to submit questions. We want to hear your questions. We want to address them. We want it to be impactful to you. We'll address those questions at the end. But also, there will be some polls. We want to take your pulse on things and make sure that as we progress through today's meeting plan, that each section is on point for you. And as I mentioned, our goal is you leave today having learned something new, something impactful, something that you can carry away and apply to your business. Lastly, today's session is being recorded. It will be posted to various websites. All attendees will get a link to it, and we encourage you to share that with a colleague. Okay, so quick show of hands before I go into this story. Do you know, and you can be honest because I can't actually see your hand. Do you know right now what your firm's electricity exposure is for the next 6 hours? Not your monthly position, not your seasonal, but the next 6 hours. And if you're uncertain about that, you're not wrong, you're not alone. You're just operating in a market that until recently didn't bring the tools that you needed to manage your business at the granular level that today's electricity market requires. So looking out at the world around us, many of you know this, but just to level set, there's been a lot happening in the electricity market. The mass adoption of renewables globally, the intermittency of renewables, the adoption of BESS, of battery storage solutions, the changing market rules, for example, CAISO, EDAM, and then ERCOT, there's rules changing all across all the different wholesale electricity markets. Things are dynamic. The generation mix has changed. The load profile has changed. Volatility has definitely changed. And then data centers. We have all this forecasted load that's supposed to be coming online in the States. We have some 3,000 new data centers that have been permitted. Some are under construction, some are, the headlines say, may not be built, but regardless, there's a lot of new load coming on. And so that spike in demand is enormous, and it's very hourly. So in parallel to all these market developments, what I observe, what my clients tell me, what we see globally, this group that's presenting to you today, is things haven't kept up. The tools, the risk management playbook, how we go about things is scrambling to catch up. And so in that mismatch between the way the world is operating and the tools that we have, well, that can be pretty expensive. So one quick story, and then we're going to get into the meat of our meeting plan. I mentioned I work with a lot of different clients. One of them is a global metals client. They smelt aluminum, alloys, big giant industrial operation, facilities spread out geographically all over the place, lots of different electricity markets. On any given day, my client has billions in commodity exposure. They've got their metals positions, they've got all their various supply agreements, they have FX, and then they have power. So the chart on the right is trying to be a little bit cheeky, a little bit humorous. There's a saying that aluminum is really congealed electricity. What that's trying to illustrate is just how big of a part of this metals business is electricity. It's roughly 35% of the cost of aluminum is power. So now this client then is sophisticated. This is no mom and pop shop. They've got your Bloomberg terminals, a big expensive ETRM, lots of different quant tools surrounding it, seasoned traders. But when pressed to show their real-time electricity exposure, it can't be done because power is always treated like a bill, like a utility bill, and not really a trading position. So you pay your bill, you deal with it operationally, you move on. It wasn't even in the same place as all those other positions that I've got on screen. So it wasn't being watched the same way. So then as power prices spike up, $400, $600, $1,000 a megawatt hour during volatile periods, there's no hedge in place to protect against that specific risk. There's no contract, no instrument. So the client is flying blind at the periods that really matter the most. And they're sophisticated. It's not that they aren't smart. They're just operating with tools that were built for a different era. And so there's this need then for new instruments, new markets, new ways to price and transfer hourly risk. And that brings us to why we're here today. Okay, but before we go further, let's have the first of those polls that I mentioned. So pollster, there we go. Our pollster is on point. Do you think intraday power price risk affects your firm? Please tick one of the boxes. And I can't vote, so I'm not going to bias it in one direction or another. Hopefully we have some voting ongoing. All right. Alistair, Ned, I think we're in the right meeting. A substantial portion of today's participants do agree, yes. Okay, good. We're in the right place. That's encouraging. One more quick poll question. Pollster, how is your firm currently managing your intraday? in preparing for this, it occurs to me I should have had that Jeopardy music. That would have really made this, that would have really made today pop. And the survey said, okay, how about that, Alistair? Yeah, yeah. I think that probably aligns with our going in assumptions. Okay, I want to introduce to everyone electronics. What electronics has built aligns to the challenges of today. And so, Alistair, allow me to hand off to yourself, kind of pick up from there and take us forward.
Thanks, Jason. Hi, everyone. I'm Alistair Hawker. I'm the Chief Commercial Officer of Electronix. We are a new CFTC regulated derivatives exchange focused on short-term power markets. In this part of our webinar, I'm going to explain the case for hourly futures contracts. First of all, the transformation of energy markets. I'm sure many of you are familiar with these themes. I'm going to walk you through how the grid has changed and will continue to do so, how power trading hasn't evolved until now, and that's what Electronix is here to help with. The structural forces reshaping US electricity have created the case for hourly futures contracts. These changes have made hourly hedging essential for effective short-term risk management. The forces reshaping the grid. I'm going to walk through the following four areas: unprecedented load growth, renewable intermittency and price volatility, the battery storage build-out, the rise of distributed resources, and this slide doesn't even mention extreme weather events, which are also increasingly regular and contribute to grid stress and price volatility. First of all, unprecedented load growth. AI and electrification is driving the biggest US electricity demand surge in a generation. Following 20 years of almost no change, demand growth is now surging. The US will need to add enough new capacity to serve 100 gigawatts of additional peak demand by 2030, roughly equivalent to powering 75 million homes. And as widely reported, grid operators are straining. PJM is a prime example, where the cost of wholesale power increased almost 50% from 2024 to 2025. Two, renewable intermittency and price volatility. Renewable share of total US generation is expected to grow from 23% in 2024 to 27% this year. Solar, wind, and battery storage combined accounted for more than 90% of all new generation capacity added last year. The intermittency of renewables drives intraday volatility, and renewables have created negative prices which have now become routine. This volatility has made the hour a fundamental unit of price risk, not blocks of hours or days, weeks, or months, but really individual hours. The signature of structural volatility is the duck curve. This is now a common pattern across the ISOs. This pattern, originally seen in CAISO, is now visible across ERCOT, PJM, and MISO. And here's an example of the duck curve. This really is what we refer to as hourly shape risk. This is the shape of intraday wholesale market prices and how they vary throughout the day, different times of peak demand, different times of peak renewable production, in particular the dip in the middle of the day when solar is strongest, and at the end of the day when solar ramps off and evening demand ramps up. And it's sort of the shape of the duck, and that's where the expression comes from. This example is just some data from ERCOT North Hub from a couple of years ago. But if you just look at this, the orange dotted line shows an example of if you had a fixed price hedge of $32 in place, you'd see it really doesn't fit any of the hours in the entire 24-hour period. Early in the day, you can be underhedged, and later in the day, overhedged early in the day, severely underhedged later in the day. And this is from the perspective of a buyer, a hedger who's trying to hedge against higher prices. Obviously, there are perspectives of a seller as well, but this is in case of a buyer. So that's the rough shape, and it just shows that this doesn't fit that hourly shape. The next day, next example is a stress day. This is an example of a peak summer day in ERCOT and how that shape evolves slightly flatter early in the day and a much bigger spike in the evening hours as it's still very hot. A lot of air conditioning comes on, a lot of evening load. And even with a higher priced hedge, it still does not fit the actual shape that someone who has exposure to these prices would be feeling. The third area is the battery storage build out. US battery storage capacity has grown exponentially, really pretty much from nothing over the last 5 years. And batteries themselves are changing the price dynamics. While they do compress traditional price spikes, and that's what they're there for, and have a very important purpose for that, they also create new volatility patterns around the recharge-discharge cycles, adding further complexity that necessitates sophisticated price risk management. Battery storage is creating entirely new types of market participants who need access to an hourly futures product to help them precisely hedge and monetize these assets. The rise of distributed resources, the fourth area. Distributed energy resources, DERs, or virtual power plants, VPPs as they're also known, are a new kind of market participant and further add to the complexities, blurring the boundaries between generation and load and creating a more complex, faster moving wholesale market that participants need to actively manage. And they're also further contributing to the new and diverse types of power market participants, I should say. The prior power trading landscape and the gap that Electron-X is here to fill. Prior to Electron-X, power trading was either physical in the real-time and day-ahead markets, or through PPAs, or a bilateral OTC swap derivatives trade, or via other listed derivatives exchanges as broader and longer duration exposure. The market's hedging tools built for the old grid have not kept pace, and Electron-X has been built to solve this. Electron-X is a new way to manage power market volatility. We are here to address the hourly shape risk that is now prevalent, providing a granular product that is accessible to all. We operate individual hourly markets on central limit order books. Pricing is transparent and all trades are anonymous, but in public. No bilateral negotiation, no block trades. We release collateral as fast as possible so capital usage is as efficient as possible. For our ERCOT products, this settlement process is almost instantaneous at the end of the hour once the contract has expired. As our markets are centrally cleared and fully collateralized, there is virtually no counterparty risk. We are accessible to all market participants, which is particularly important for smaller and newer participants in the grid. No intermediaries are required to get access, and no credit assessment is necessary. We offer two types of products, bounded futures and binary options. Bounded futures are unlevered futures products with a contractual floor and cap price. We provide 3 different variants of those. These settle based on the real-time wholesale power prices for the hour as published by the ISO. We support these for major trading locations in each ISO. For example, in ERCOT, it's the hubs. We list 120 hourly contracts for each product in each trading location, representing every hour for the next 5 days ahead. The other product group is binary options. These are event contracts that settle to either 0 or 100, simply determined by whether the real-time price for the hour is above or below the day-ahead price. We have built a trading platform for today's dynamic energy market. Our accessibility extends beyond the account opening process to a user-friendly trading platform for accessing these hourly contracts, both via a web-based user interface, for example, you can see on the screen in front of you, and an API. And finally, in terms of our ISO coverage and our ISO expansion, we are currently live in ERCOT and PJM. ERCOT we launched officially hub-wide across in early February, and in PJM we just launched our PJM products last week. We're planning to roll out MISO and CAISO this summer, and get to SPP, New York, New England later in the year, hopefully all by the end of the year. That's it for me. Thank you.
Fantastic. Okay, Ned Stainthorpe, bringing you into this conversation. Hopefully, our audience is now thinking, okay, I'm interested in this, but what does that mean for all of my trading systems, ecosystem, and tech and what have you? So, Ned, we're coming to you here in just a moment, but I think we're at a next poll question. So, pollster, there you go. When our audience, those of us who are market participants, when they add a new trading venue, a new exchange, what is the major factor driving that timeline? I'm really wanting that Jeopardy music. Just brings a certain level of
Yeah, we'll
tension.
wait for some answers and then I'll get rolling.
Okay, let's consume this for just a minute.
Yeah. All right. So, I mean, it's pretty well distributed. The internal approval and external venue provider onboarding is kind of the highest, along with exchange connectivity and data integration. I'm going to talk a little bit about how BroadPeak can help with this, with the onboarding to ElectronX as a technology provider. Ideally, you can onboard to ElectronX without rebuilding your whole infrastructure. Looking at the results of that poll that we just did, the process and timeline of onboarding a new exchange is not necessarily driven by commercial concerns. I think it's often driven by constraints on IT and bandwidth on IT and other groups. And BroadPeak comes into the picture often when companies are onboarding to new exchanges. And so we see that for a lot of shops, there's a definite predilection toward building your own stuff in-house, your own software solutions. And that's not definitively wrong. If you have the IT resources and the expertise, great. When it comes to the speed of onboarding to a new exchange, it will almost certainly slow you down if you're building everything yourself. We've talked to a lot of firms about this. It can take several months. It can take 6 to 12 months to build the things that I'm going to talk about and take it live. And then on top of that, on the back end, and this is probably one of the things that's most underestimated, is just the permanent maintenance commitment that you're making or that's being made on the part of your IT. So over time, IT ends up spending a lot of their time babysitting all these different custom connections instead of working on things that could add more value to the business.
Ned,
So
I want to comment on that for just a
yeah,
quick moment. From my own real world experience, I was an ETRM software vendor guy for 7, 8 years. And I looked after 100 clients, mostly in this hemisphere. So the Americas, somewhat in Europe. I'll tell you that last bullet point right there is very real, that using those traditional approaches that you describe, it's not a build it once and done. And what I experience as the ETRM vendor guy in my past life was, because it wasn't once and done, it was a dynamic thing. It was also a source of draining all the joy and client satisfaction out of my market participant trading system customer users, because it was always broken for some reason. That just really resonated with me,
right.
as do these
Right.
charts. Ned, keep going. Talk about this. This is compelling.
Yes, absolutely. So, when it comes to like speed of onboarding to electronics, we definitely recommend off-the-shelf adapters rather than a custom project that takes many months. This slide is some data to that effect. So these two charts are showing different elements of the same thing. On the top is showing how long it takes to implement these solutions if you're building it yourself versus if you're buying off the shelf. And we're talking about trade capture, end of day reconciliation, surveillance, and position limits. So you can see that at the top. And then on the bottom is that same project, but it's divided up by how long each different element of the project takes you. So requirements gathering and design, development and config, UAT, and go live. And so obviously, I mean, you can see there's a huge difference. We found there's an 87%, we can reduce your time by 87% the number of hours if you're using off the shelf connectivity versus building it yourself. And I think that makes sense. It's the difference between building a house or buying a house.
Well, this
You look like
aligns
you
to
want to say
the,
something.
yeah, I was going to say that, Ned, that this aligns to the poll question that we just got from our audience. As a housekeeping item, I'll add that we've got 66 participants. So across those 66 participants, I think the largest piece of time, based on what our audience said, was indeed that config portion right here. I think
Right.
that's I think we're lined up on the same topic. I do want to add for the benefit of our audience that this data on the left is real world. I mentioned in my opening that I work with 100 different clients globally, Asia Pacific, Europe, North, and South America. And we went through a number of ETRM deployment projects and isolated just the work streams related to these three things. So this data is based on many existing clients. You would know them if I named them, but they have a significant physical and financial business, and this is real world. Now,
That's right.
Ned, kind of talk to
Just
us then about point three here.
just to echo that last point, we also we took our Broad Peak's
Mm,
real projects, real project timelines and resources, and went through, and that's how we came up with these numbers. So we do stand by these numbers.
I like it.
All right. So, what do you actually have to do for onboarding to Electron-X? I'm going to run through these items, trade capture, your end of day process, and then some of your compliance obligations for position limits and surveillance. Won't be too painful, I hope. Next. So for trade capture, how are you going to get your trades once you start trading on Electron-X? How do those deals get into your ETRM? That's trade capture. So when you call Alistair to onboard to Electron-X, this is one of the things that he's going to ask you about or that you're going to talk about. It might suffice to enter deals manually at first, but that's neither scalable nor kind of well controlled. It's very prone to error. You can build your own trade capture feed, which we do not recommend, or you can buy an off-the-shelf adapter, which we do recommend. In this case, given that Electron-X, these new hourly products have some new instrument taxonomy, some different trade details, the trade capture feed directly from Electron-X ensures that you have all the accurate trade details, all the taxonomy in real time from day one.
Ned, one quick question on
Yeah,
this. I see over there on the right-hand side, Target and Allegro trade capture. So that would imply that BroadPeak works with Allegro, but various other ETRMs as well, right? Whether it's packaged or custom.
that's right. That's right. So this screenshot is a screenshot of our adapters in BroadPeak's integration platform. And so on the left there, that is our new Electron-X adapter, fully tested, certified by the exchange. And then on the right, these are the target systems that the data is flowing into. And so yes, we have an Allegro named adapter. We have all kinds of adapters, and the other ones that aren't named, kind of other ETRMs. It's we have the generic technology and we configure it. Again, kind of part of the point. It's real quick to configure if you have the hard part done already.
So then, Ned, one final thing on that before we move to the next topic. Then BroadPeak has already deployed clients with all of those different types of ETRMs.
Oh yeah, Yeah, we connect. We're agnostic to any, well, really to any upstream or downstream system, just connectors on both sides. So there's no ETRM that we won't connect to or that we don't connect to.
Great.
Yeah.
Awesome.
So assuming once you got your trades in your ETRM, you got to run through the end of day process or reconciliation or tie outs, whatever you want to call it. So part of the reason to have the trade feed and get the trades into your system correctly the first time is so that you don't run into issues with the end of day. One unique aspect of Electron-X is that it's a direct access venue. So there's no FCM standing in the middle. The FCMs aren't a part of this now. You deal directly with the exchange. Now, when it comes to end of day processes, typically what we see and what we work on with customers is you're taking the end of day trade files from your FCM and then comparing that to what's in your internal system, your ETRM. In this case, that source of truth, instead of being the FCM, is the exchange itself. So you probably want to think about having a way to download that end of day trade report and incorporate it into your process, hopefully in an automated fashion. But that kind of direct access is the unique aspect of this with Electron-X. And in terms of monitoring for market abuse, the Electron-X feed, the adapter that we have that we just looked at in our system, that flows both the orders activity and the trades. So anytime a trader enters, a bid or an offer, or modifies or cancels an order, all that activity flows through the same pipe. Any kind of market manipulation, wash trading, or spoofing is in effect in the same way it would be for any other exchange. So this is, CFTC regulated. So we do recommend having a surveillance capability from day one on this to ensure compliance. And then on that, we recommend or we've seen an increasing amount of interest in being able to see your physical trades in conjunction with all your financial activity. We've seen a lot of interest in FTR surveillance or virtuals, in addition to outright physicals and kind of traditional financials. And so now these new hourly products are a new element in that picture, a new product to be able to look at the entire mosaic of your trading. We read FERC cases. If you read through them, it's typically not just like a physical thing. It's the combination of the physical and financial trading that FERC is looking into. If FERC is ultimately going to be looking into like your physical along with your financial and your FTRs, then we think you should have that same view, the same view of your trading that FERC is looking at. And finally, we have position limits. This is the last thing I'll touch on. Again, here, like the unique taxonomy or the different products that traditional exchanges have spot month limit and all month, or it's spot, single, and all. Here, Electron-X has the single hour accountability levels, so just any given hour, and the spot hour ending limit. This is a new thing. We can talk a little bit more about it, but it's important to note that this exists and should be incorporated into your existing system. This reference data is published on the website. We have incorporated it into our position limits tool. Having the ability to receive alerts before you go over the threshold or as you're approaching it, I think is critical. And so that's why we built it. We'd love for you to use our system, but it really can be any system as long as you can get that alerting about being at the limits. And I think that's pretty much all I had.
I think so. Before we head into our next poll right here, before we go there, I want to go backwards. Well, I guess we won't go backwards. Let's look at our poll. How long does it typically take your firm to go live on a new exchange or venue. And audience, while you're answering that poll, the context around this is, well, is the project narrowly just going live on the new exchange, meaning integration or plumbing, connecting so that I can pull those things into my ETRM? Or is it like the previous graphic that I had up, which was it's that plus the other components? So let's see what our results are. Wow. How about that, Ned? Does that align then to Broadpeak's view of, or actually maybe Alistair, you have visibility into clients that use Broadpeak as well as those which don't. Is the 1 to 3 months, 3 to 6, or 6 months? Does that align with your own expectations or
Yeah, I think
observations?
that's pretty much in line. That's right. For a full-blown integration.
So
Yeah,
about, I mean, it looks like almost 60% takes over 3 months.
yeah. And so then, Ned, to kind of put a bow on the Broadpeak segment, then the contrast then with Broadpeak, if I go back up in our presentation over here, then hopefully that makes this very real to folks that in contrast to the 3 months or 3 to 6, just across a bunch of different clients that you have, Ned, is it more like a month or two? What's the
For us, well, depending on what all they need. If it's just like the trade capture feed, since we have that adapter, when you click on that adapter in our system, then you just enter your username and password and connect, assuming that you have an account with Electronics, that data will start flowing immediately. Limits and surveillance take a little bit longer, but we've kind of built out all the prerequisites. So yeah, I think it's a matter of weeks rather than months.
fantastic? That concludes the prepared comments for our session today. Um, why don't we pivot into Q&A? So looking then into our questions, I'm looking for, well, I guess the first question over to you, Alistair, is how do these hourly futures settle? I think you talked about that a little bit. Maybe kind of restate that.
Yeah, for sure, Jason. So every hour has its own hourly contracts for every hour for the next 5 days out. At the end of the hour, so let's say if you're trading hour 12 Central Time, that represents the price of power from 11 a.m. to 12 p.m. on average. What we do is we go to the ISO. So in the case of Texas, for example, that's ERCOT. ERCOT is the ISO. They publish prices for that hour. And every ISO is going to be a slightly different methodology depending on what types of feeds that they have available, 5 minutes or 15 minutes, different intervals. But we essentially calculate what is the average price of real-time power for that hour. And then we determine if it's within the bounds of our contract. If it is, then that average is the final settlement price. If it's outside the bounds of our contract, then the floor cap price for the contract will apply, and that will simply be the settlement price. But we run this calculation very efficiently straight after the hour ends. So in the case of ERCOT, for example, and there will be different nuances for every ISO, but in the case of ERCOT, right at the end of the hour, in that example I gave at 12 p.m., we will run that process and then settle open positions within a minute or two, based on that price. And so that's a process that will just run continuously every hour that goes by, every expiration, we go through the same process.
Excellent. Thank you for that. As a housekeeping reminder to our audience, we want this to be interactive. Please ask us questions, post them into the Q&A. You should see a toolbar where you can submit those to us. Ned, so coming to you, I think what you said is that the biggest, well, let me just ask you. So remembering that Startling chart, really tall bar over here for
Yep.
business as usual approaches, really short bar over here for the broad peak approach. if you were to just put your finger on one big chunk, like how does that compress? What part of that compresses so much with
Right.
broad?
Right. So, I mean, in this case, we can, if we look at electronics, if you want to build a trade capture feed, it's a fixed feed, not to get too technical, but so, you need that capability. That is not the easiest thing in the world to parse the fixed message and process that. In general, I would say the complexity around position limits is often underestimated. All the kind of logic and different roll-ups that go into things. And then I guess kind of the last piece of my answer would be like everything. Everything always has a little more hair on it than you think. Like even things that really you think should be simple, are gonna just end up taking longer than you plan. That's my experience.
I'll add also from a scalability standpoint, we love all of our ETRM vendors. They are the core of many of our clients' trading businesses. And ETRM vendors tend to concentrate their engineering efforts, their capital dollars on new features related to risk and risk management and those types of things. And repeatedly, what we find then is the integrations or the adapters that come with maybe struggle a little bit for various reasons. I know that whenever I met Broad Peak 10 years ago, a challenge that we had as ETRM vendor was some of our clients were doing 10,000, 20,000, 50,000 trades in a day, and our adapter just was not built for
Right.
that kind of world. Kind of talk a little bit about the scalability portion of it too.
Yeah, yeah, I think that's well said. The ETRM companies do have some integration, but it's not their focus. And as far as I know, I don't. Broadpeak is the only company I think that has built out this kind of a la carte offering per feed. You can just buy one feed from Broadpeak, and that's one electronics feed. No other company offers that a la carte off the shelf. And I think that it's just you get in the weeds. I mean, a lot of it's out of my technical depth as well, but I think that it's just the complexity and yeah, the challenges once you get into the weeds of the trade capture and scaling. And like you said, 50,000 trades a day. The new products flowing through the way that that's configured for us, everything's kind of pre-configured in a way that when you start trading something new on an exchange, there's no change. There's no change needed in our system. Maybe you have to do something downstream in your ETRM, but yeah, those are
Yeah,
some.
what I saw from a real world standpoint was even the config part of it. Once that was done, testing in with a high volume throughput, sometimes business as usual approaches fall over. And then that leads to delay as we go and try to code our way around those things. Okay, we have some new questions. To Alistair, how granular is the feed? Can you talk about order book depth, updates, latency, those types of topics?
Yeah, ElectronX publishes a real-time stream of market data through our API, through which Broadpeak subscribes and then can use that and distribute that to the clients and the various tools that Broadpeak has. That is every order book, full depth of book, every quote update, every trade print. So basically, every update there is streamed in real time. And those feeds can be available to any other system as well, whatever participants would like to use it for.
Alistair, sticking with you, Europe, you had a rollout map earlier. Talk about European power market trading and hourly futures. When do the customers see that? When does the audience see that?
No current plans at this time, but we certainly have enough to do to build out our product across the United States. But I definitely think there's a use case for it in Europe, and we would hope to get there at some point in time.
So we would encourage any participants today to email you if they've got demand for Europe, eh?
Absolutely. Yep.
Last question before we wrap. Is there an hour-to-hour spread, hourly spread trades, hourly locational trades?
Yeah, that's a great question and a commonly asked question. We do plan to list other product combinations, so things like spreads. So if you wanted to trade the ERCOT north-south or northwest hub spread, for example, That's very commonly requested. We hope to add those types of combinations at some point. But we've just started out with the individual hourly markets, and then we will build on that from there.
Fantastic. Um, Others, before we wrap up, we were scheduled to go 45 minutes. We want to be respectful of time. So open floor, final
I
questions,
think, Jason, I
remarks.
just spotted one question, and maybe I should clarify. We were
Uh-oh.
asked what initial margin rates are we setting for hourly futures? So, in case I didn't make this clear earlier, and I may not have done, we are fully collateralized, which means every product is bounded and has a floor and a cap price. So the max loss is always known. So there's no unknown or surprise or unlimited risks. And so we're a little bit different. There's no concept of initial margin and then variation margin based on daily settlement prices. We simply require pre-funding in the account, fully collateralizing the position that is being put on. I'm happy to explain that in further depth with anyone offline, anyone who's interested.
Fantastic. I think then that we're at time and we should wrap. Hopefully, then, for our participants today, we had quite a crowd. Hopefully, we achieved our goal, brought you some new ideas, new ways of thinking, and we encourage you do contact us. We want to engage and answer any questions. And lastly, you'll get a notification on where this replay can be found. Thank you all for participating, for attending. We very much appreciate you.